Here, this is not sharing my screen. I'm going to start this over. Okay, let's see. Nope. Share screen.
Someone's already watching.
Huh?
Someone's already watching.
It's Alexis. Okay, I hope that's working. I'll message her and tell her to let me know if she didn't say you're here. I don't trust myself. Oh my gosh. You know, it's like you have those days where you're goofy and tired, and then half the apps on your phone, you go in to like look at something and it goes, oh, damn, gone. And it's not just one, it's several, and then some of them work just fine. So, okay, good deal. I'll uninstall them, reinstall them, and they still do the same thing. I hate technology sometimes. Any ideas? I think it's just that. I don't know if it's the apps or my phone did an update. It didn't update. It's an Android. It usually might be trouble. Huh? That's the problem. There's your problem.
You don't have an iPhone.
Okay, let me just tell you, my daughter with her iPhone is fussing because her battery not taken. She says it's because she dropped it in the tub, which is highly possible.
I was gonna say.
But she has had to replace that. We got that iPhone like a year ago, and she had to get 2 or 3 replacements because it kept messing up. I still have my old one and it works. My old Android. I got tired of iPhones.
Never had a problem with iPhone.
You know, I like it. I got tired of them upgrading their software to the point where your old phone doesn't work anymore right at the 2-year mark.
No, that's not how it works. It took like
It seemed like it.
6-7 years for my like I had a 4 in high school.
Well, then you have my husband who has like, you know, a 4 forever and it works just fine. It's probably me. It's operator error.
Yeah, I was gonna say I had a 4 all throughout high school. Worked fine.
Yes, but that was a few years.
I mean,
But you had it for years is what you're getting.
Yeah, no, I had it long enough.
Yeah, he had a 4 forever. I mean, he just like in the past couple of years got a newer one. I was like, dang, you made that thing work a long time. And the thing is, it's a state phone, you know. He had to wait for them to replace it, so he didn't care. He doesn't like replacing them. It's too much trouble.
Yeah, I jumped. I went from a 7 to a 12.
How's that working for you?
It's a lot nicer, isn't it?
Since it's too much of a change, probably.
Like, I don't have a home button anymore, so like I was confused for the first like 3 days. I couldn't call anyone.
I have trouble answering calls because you have to swipe to get it to answer. I mean, I'm like, answer, you know, so that bugs me.
Oh yeah, you have to like to do anything. You have to like swipe certain ways to do things now.
Well,
So
mine, I don't know how
that.
the iPhone is anymore. I don't know. It works fine for me, except this one I got is smaller than the one I had. And I catch myself pushing things I'm not intending to push, but I don't know that that's really a new thing. I'm just blaming it on the smaller phone. It's not that much smaller. Okay, y'all. So we're going to start cash flows. If you remember, which you probably don't because I don't think I would, back in Accounting 1, at the very beginning, we talked about general purpose financial statements, and we went through income statement, statement of owner's equity, balance sheet. The fourth one was the statement of cash flows. We briefly looked at it, and then we moved on because you cover it in Accounting 2. And the one we looked at in Accounting 1 is called the direct method. We're going to actually do the indirect method. And previously, I used to teach both methods. But because our course objectives indicate we just need to learn about cash flows and the direct method is not used that much, I'm going to spare y'all of that agony and we're just going to learn the one method. Because that's when it really gets confusing, when you're trying to figure out how to do it this way, then how to do it this way. We will talk about the direct method and I'll kind of show you what the differences are, but that's going to be the extent of it. You're not going to have to prepare one. Okay, so the statement of cash flows is a financial statement. And what it does is report the money in, money out. It just kind of is a summary of cash came from here, cash went there. And, you know, it's a report that it's different. And if you're not somebody who's used to looking at them, it's going to be a little bit confusing to you. You know, so bankers, you know, they're going to want to see them, but they're used to looking at them, you know. You and me, if we've never seen a financial statement before, we might look at it and go, what is all that? What does all that mean? But I think y'all kind of feel like that anyway. All right, so the purpose of it, it's going to tell the user about the company's ability to generate cash from operations, its ability to maintain its current operating capacity, and what is its ability to expand? Are they meeting their financial obligations? Are they paying their bills? Are they paying their loans? And about paying dividends. Is this company paying dividends? So cash flow will tell them all that. And, you know, knowing whether or not they can maintain operating capacity, that's important. Are they going to be in business a while? I mean, if you're going to loan a company money, if you're a banker, aren't you going to want to know that this company's pretty solid and they're going to be around? Their operations are good. They're making money, you know, so it's important to them. And a lot of that they can tell using the other financial statements, but this is just one more tool they can use. Then you're going to have it used by managers. They're going to look at past operations and use it to plan the future operations. And they're investing in financing activities. And we'll go into what each one of these is in just a second. So like I was saying, it's going to be used by external users. We learned internal and external in Accounting 1. Internal users are people inside the business, managers, owners, supervisors, people inside the business that need the information to operate, you know, their section, their area, their region, whatever. External users are going to be like the bank, possibly government. If you have hacked off the IRS, they might want your financial statements. I have seen that. I think I told y'all that story. Creditors could be, did I say the bank? It could be the bank. It could be vendors. You know, vendors are going to want to see how's your business going? Are you solid enough to where we can trust you to pay your invoice in 30 days? You know, it's just kind of like running a background credit check. So these financial statements and this one as well will tell the users a lot. All right, 3 types of cash flow activities. Think about this too as the 3 sections of your cash flow statement. You'll have operating activities. That's day-to-day stuff. It starts with net income, and we'll get to that in a minute. You're going to reconcile back to what is just cash. Investing activities, those are cash flow transactions that affect investments. So it says long-term assets, buildings, land, machinery, vehicles. Those are your long-term, your fixed assets. Or it could be an investment of some sort, like literally you're buying stock in another company, or you have an account at Schwab with a bunch of stuff in it, you know, your investment account. It could be that the company, maybe they came across a piece of land that they know just from word of mouth, this area is fixing to start booming. And so they buy a piece of land that they're not going to use for the business. They're going to hang on to it to make some money off of it. That's an investment, you know, something like that. So that would be an investing activity. Financing activities. So those are going to be cash flows that affect the debt and the equity of the company. So debt is going to be what they owe. Equity is going to be stock, retained earnings, that kind of stuff. And I'll put on here equity. Remember, any kind of equity activity that's funding the company, that's going to be selling stock or repurchasing stock. Debt's going to be bonds and loans, because bonds are loans. All right, cash from operating activities. This is the first section that we look at. All right, it's going to report money in, money out from the day-to-day stuff. the average daily activities, paying your employees for working there, the electric bill, stuff like that, you know, the normal day-to-day stuff. Such a, like if you're going to sell something, if you're going to sell a piece of equipment or something, you're not doing that every day unless you're Puckett Machinery or something, you know. So this is just their day-to-day stuff they do as a business to earn revenue. All right, so there's two different methods that can be used, direct and indirect. So direct is the one we are not going to use, but I'm going to tell you about it anyway, because you'll have some questions here and there about it that you're not going to have to prepare one like this. All right, so it's called the direct method because it's more straightforward. It's honestly, to me, it's simpler to look at, because when you're looking at the operating activities section, it'll literally say cash received from customers, this much. Cash paid for merchandise or inventory. So it's very simple and it's easy to understand. So it's dealing with straight cash payments for inventory, with merchandise inventory, any operating expenses. Well, operating expenses are going to be the stuff we've been looking at. Wages, utilities, miscellaneous, my favorite. Trying to think of anything else. All that's coming to me is wages and miscellaneous today. Supplies expense, utilities expense.
So would you see like, well, I guess you wouldn't see like, for like equipment and things like that, would you see like depreciation on that?
Mm-hmm. Depreciation expense, you could call an operating expense, yes. Because you were using those assets in the process of earning revenue. So that would be your day-to-day operations. Yeah, you're right. All right, so the advantage to this method is it's direct. It's simple. The disadvantage, the data you need to create this report may not be, they say readily available. It may take some work to come up with the numbers you need. So it can be costly to prepare. It can be expensive because you're having to pay somebody to come up with this data. So you've got to think about they're spending their time doing this instead of this, or, you know, maybe you're having to pay an accountant to come up with the information. So it gets expensive. It's time consuming. So it is very infrequently used. This is not going to be the one that's preferable. Not to mention, if you're going to be in compliance with GAAP, you need to use the indirect method. So the way the indirect method works, we're going to start out with net income. And we are going to adjust it, add back or take away anything that does not involve the receipt of cash. So think about it. We've got, we've earned some revenue, but we have not received payment from the customer yet. So you'll see the revenue on the income statement. That's going to be part of your net income number, but you don't have cash for that particular piece of your revenue amount. So that would be something you would need to subtract from net income, because even though it's revenue, it's not cash that you received. Can you see it? What you looking for? Is that better? Okay, so adjustments like depreciation. Depreciation is an expense. It's a real expense, but it's not cash. We did not write a check for depreciation expense. The cash outlay would happen when the asset was purchased. So that's where you'll show a cash outflow. The asset was purchased, 10 years ago. That's when we showed the cash outflow on the cash flow statement. But now that we're expensing it a little at a time, depreciation expense is not a cash expense. No money went out. When you sell assets, y'all remember how to calculate book value?
Market value.
Hey, now, if I told y'all I'd give you $5 if you could tell me, y'all wouldn't be snickering. Y'all be digging trying to find it out. Do what?
Market value minus depreciation.
No, it's not market value. You're going to use cost minus accumulated depreciation. So it's your undepreciated cost and then you'll subtract that from whatever your sales price is. That's how you figure out book value. I'm sorry, I said that's what book value is. Cost minus accumulated depreciation gives you book value. Now, to figure out if you have a gain or loss on something, you take your sales price minus that book value, and if you have a positive number, you got a gain, a negative number's a loss. But think about this. What is the cash piece of selling some equipment? I mean, you might have a gain on it, and that gain's going to be part of your net income figure. It's income. But what represents the cash part of that transaction? Is it gain or is it something else? Or is it cash you got in your hand, sales price? That's the cash part. So think about that when you have gains and losses and that sort of thing. The cash piece of it, the cash inflow, is how much you sold it for. Okay, so think about this. Y'all ever sell stuff on Facebook or anything? Yeah. What do you sell? What's something?
I sold my speakers.
You sold your speakers? How much did you pay for them when you bought them?
The whole set was $300.
Okay, how much you sell them for?
$300.
You broke even. That's awesome. Did you not have them very long?
I have it for like 3 years.
Oh, wow. Okay, so he doesn't have a gain or a loss. He did great, though. I mean, when you've had something for 3 years that's had wear and tear and use, and you can still sell it 3 years later for the same amount, that's pretty cool. So he paid $300. So his cost is $300. His sales price was $300. So he has no gain or loss. He just got his money back. That's pretty good. Anybody else ever sell anything on Facebook or anywhere? Never? They'll never sell anything? Okay, so let's say I buy my son an electric guitar, which this is true, from a friend, and I pay $500 for it, which I'm thinking I got a good deal. It was a good guitar, and I think he wanted another one, so he gave me a good deal on it. Well, my son piddles around with it for a while and decides, I'm not real interested in this. And so after he lets the dust collect on it for a few months, the guy comes back to me and says, "Can I buy my guitar back from you?" And so I sell it back to him. But let's say he is only willing to pay me $400. So if I paid $500, he gives me $400. What's the result for me? I lost $100, right? But how much cash do I have in my hand? $400. That's your cash piece of it. That $100 I lost, it's just telling me the difference between what I paid and what I got. It's not actual money. The money in hand is the sales price. Does that make sense? So y'all just remember that. The gain or loss represents just the difference in what you had in it versus what you were able to get for it. It's not cash per se. It's created from you getting cash, but the actual cash inflow is the sales price. Does that make sense? Yes, no?
Yeah, that makes sense.
Unsure? Okay, so that's something that we're going to be looking at. That's something that has to be, you've got the gain or the loss that's affected net income, but it's not cash. Your cash came in when you sold this thing, you debited cash, credit to something else, fixed asset or whatever. Who's out there? Nobody?
Anyone?
Everybody's looking out the door. As long as it's not some creepy clown, I'm cool with it. Who hates clowns? Hate clowns? Nobody in here hates clowns. Are y'all listening to them?
They're weird. I don't like them either.
They're creepy.
You should watch Killer Clowns.
No. I've always hated them.
Hilarious.
I've hated them since I was little. I can't remember when people were going around doing that.
Yeah, there was a killer clown like outside of my high school.
People crazy. All right, so we'll start with net income on this method, and then we'll add and subtract things that are not cash, okay? So we'll look at different changes in certain assets and certain liabilities. It's not going to be all of them. But we'll go through the specifics later, so don't get too hung up in making sure you know, this is just getting the basics down, and we'll go through examples that explain this better. All right, so the reason we do this, the accounting method that we use in this class is the accrual method, which means we may have things that we're recording that we either haven't spent the money yet or we haven't received the money yet, but let's say you've earned revenue doing a job for a customer, but they're going to pay you next month. So you've done your job, you've earned revenue, so you're going to show that. You're going to make an entry to credit your revenue account and debit accounts receivable. That's not cash. That revenue that you recorded is going to affect net income. If it wasn't there, your net income would be smaller, right? So since it's not a cash item, that's something that we have to reconcile. But because we use the accrual basis, it's going to be affected in our pre-adjusted, net income number. So our income statement is going to reflect that income in there because we're on the accrual basis. We're going to show any revenue we've earned, any expenses we've had that maybe we haven't paid for yet. It's all going to be there. So those are the things. If the cash hasn't been expended or the cash hasn't been received, things like that, we're going to have to account for, because what we're doing essentially with that statement is converting from accrual to cash. Okay, so that's the point of it. You're with me? Okay. All right, so the primary advantage, it reconciles the differences between net income and net cash flows from operations. This one takes less time to prepare. I'm not sure I agree with that. They say it takes less time to prepare. It probably does, because in reality, you have to come up with the data to do either method, where when we're doing it here in accounting as a problem, they've given us all the information, so we're not really having to dig around too much. So it's obviously going to take us less time to prepare in class than if you were actually trying to do this for a company. This is the most commonly used method. This is GAAP. This is the one we're going to look at. So the difference between direct and indirect is only reflected in that first activity section, operating activities. The other two will be identical. There's no difference. So operating activities is where those differences come in. All right, so your second section, investing activities. Inflows and outflows related to changes in long-term assets. Okay, so you might have inflows from selling a fixed asset. Maybe you sell that piece of property you were holding for investment. You're selling investments. Maybe you're selling stock that the company owns in an investment account. It could be any of that. Intangible assets. An intangible asset is going to be something like a patent or a copyright or a franchise. So maybe you have opened a branch of Krispy Kreme. Maybe when you do that, you have bought a franchise and you have to pay fees for it. So maybe you're selling something like that, like a franchise would be intangible. You can't put your hands on it, but it's worth something, So that's an intangible asset. By the way, beware of going into franchises uneducated. The franchise fees that they charge you for using their name get pricey. But like if you were to open a Starbucks makes a friggin' killing. They got to. So even if you had a franchise, you could probably still make it kill. It's crazy what you can make money opening. Starbucks is probably one of them. Financing activity is going to be inflows and outflows related to any changes in a company's long-term liabilities. And that's going to be those that are due further out than 1 year. 1 year makes it current. Anything past 1 year makes it long-term. And they're also going to affect stockholders' equity. So cash inflows might be issuing long-term debt. In other words, selling bonds, getting a note from the bank. or it might be selling equity securities, meaning stock. So these things in the parentheses, that's what these two are. Debt's going to be issuing bonds, getting a note from the bank, getting a loan from the bank. Selling stock is going to be the equity. All right. And your outflows might be paying dividends or paying back loans, acquiring treasury stock, buying your stock back. All right. You also may have investing and financing activities that are not cash. Remember, we had that example where a company traded stock for legal fees. That's not cash. There's no cash changing hands. I mean, the attorney is hopefully getting something of value in that stock, and you're giving up something of value. So it is an investing or financing activity, but it's not cash. There's no cash moving. So that's going to go in a different section. It's going to go in a section at the bottom of the cash flow statement. And the reason you're even going to show it is because it does eliminate the need for future cash outlays. So let's say you bought convertible bonds, and you trade those convertible bonds for stock. Well, in essence, you're receiving stock, and because they're giving you the stock, they're retiring debt. They're essentially paying it off, but they're using stock to pay it off. So they're not going to have to pay you any more interest. They're not going to have to pay any more principal payments if it's serial, or at the end of the bond term, they're not going to have to come up with that cash to pay you. So you're eliminating future cash payments. Okay. Now that you're thoroughly bored. All right, a lot of this stuff in here, like I told y'all before, I used to have separate reading guides and worksheets, and I just combined them. So I would always have like some notes in the worksheets that to kind of refresh your memory when you're working through stuff. So I just left it. I mean, it's not going to hurt you. This is an exhibit out of the book, and what it does is tell you, okay, if you're looking at cash inflows, you've got your operating, investing, financing. Here's some examples of what would fall in these particular categories. Same thing on the other side. So it gives you a reference to go back and go, I don't know what this would be. See if you can find it, to answer your question. And then I've kind of got a recap of things we just went over. This is like just a picture of, this is what cash flows from operating activities looks like with the direct method. It's like I told you, you have cash received from customers, cash payments for expenses. It's just real straightforward. On the indirect method, you're going to start with net income, and then you're going to add an increase in accounts payable, subtract a decrease in or increase in supplies. And so it's a little more, it's just not as easy to understand to me. That's just my, don't take my word for it that it's better. I just like that one better. I like things that are simple and boiled down and take all the fluff out of it. So that's why I prefer the other one. Are you hurting still? Still having back trouble? I'm sorry. You don't look like you're just overly thrilled. Of course, it is accounting, so. Sorry. Hey, y'all, I didn't make this class. I'm just trying to teach it. All right, so again, this is just a lot of summary stuff. Go back and refer to it if you need to as you're reading. I mean, the way I've got it written in those points might be a little easier to understand, because what I did was I would take, the way you're filling in the blanks is straight out of the book pretty much. Where you've got my little summary, it's more in my words, so see what helps you. All right, so we're going to do this first example of classifying cash flows. So we're going to look at each item on here, and we're going to determine which section is it going to go in. Too big. All right, so this first one, purchase of a patent. Where would that go?
All three of them?
I want to say I saw it in investing. Yeah.
Outflow investing.
What?
Outflow.
Yeah, it's an outflow. So look at, where is it? Okay, so look at page 2, where it says cash flows from or used for investing activities. So it says cash flow, selling fixed assets. Gee, I can't even remember what was written there. It's frozen. Where did I go too far? God. It's up here. Nope. Too far. Okay, so selling fixed assets, investments, and intangible assets. A patent is an intangible asset. So just some of these things you're just gonna have to remember. A patent is not something. I mean, you might get a piece of paper that verifies you have this patent, but the value is in the right that you have, that no one else can, copy your invention or whatever exactly. So the value is in the right, not necessarily that piece of paper. So that's why it's called intangible. You can't really touch your rights, but it is valuable. It has worth. So that's going to be an investing activity. So Pablo is correct. I guess I've read off on this thing. All right, so this is going to be investing. All right, so the payment of a cash dividend, where would that go?
Financing.
Financing. Again, I mean, they're not going to all be word for word on this little picture, but if you like to look at pictures better than you like to look at all these words, look at this picture. You might find it on there. We know that, if they're paying something, it's a cash outflow. So to pay dividends to shareholders is on there, on the financing block. All right, sold equipment. So if you sell equipment, is that a cash inflow or a cash outflow?
Cash inflow.
Inflow, because you're selling it, not buying it. So where would that go?
Investment.
Investing. All right, what about cash sales? Operating. What about the purchase of treasury stock? Financing. You got it? What about the payment of wages?
Operating.
Operating. On this thing right here, it says to pay employees. That's your wages. But think about it as the day-to-day stuff that goes on in your business. All right, so y'all take a look at this one real quick. Take 2 minutes and fill those in. See if you can answer those. See if we're going to get the grasp on them. This is probably the easiest part of the chapter. Y'all gonna make it?
I can't really tell you that.
You say, yes, I'm gonna make it. It's all mental.
We got a long way until 12:15.
No, 12:15. Oh, today?
Yeah.
I was just talking about in general. I didn't mean in this class.
Oh, it's
All right. Holland plays baseball and Pablo plays baseball. How much of that is, who else does? Who am I missing? How much of that, who else is an athlete? Lord. Soccer?
Yeah.
How much of it's mental?
all of it.
All of it. Oh my gosh. You tell yourself you can't do something, you can't. I mean, my mind plays with me so bad. It's awful. Just keep telling yourself, you can do it. I'm going to make it. If you keep telling yourself this really stinks and I'm going to die. I mean, y'all know I'm right? All I have to relate it to is running. When running gets hard and I really just want to stop, if I tell myself I'm dying, I'm hurting, I really want to stop, it makes it worse. But if I start telling myself, you can do it, you only got a little further, and I just kind of pump myself up mentally, I mean, I can do it and go further. It's weird. Your brain, your mind has so much control over your outlook to things. It's scary. It's a battlefield. I mean, you take control. You're going to make it. Bring you some coffee. Bring you a snack in here. Whatever y'all need. long as it doesn't stink, I'm okay with it. Don't bring stinky food.
Go bring Funyuns.
Although, my sense of smell is still screwed up, so I may not even notice. I can smell, it's just that what I'm smelling is not correct. So annoying.
Don't bring
Don't bring what?
Funyuns.
I don't really mind
I
Funyuns.
was just making.
My kids eat them.
Because it's a different Mrs. B.
Katie eats Funyuns. They eat Doritos. I'm used to them. Just don't breathe in my face. Since we all have masks on, that would be filtered. I really would prefer no sardines or, you know, the smells, it's got to be pretty vile for it to bother me. So, bring a snack if you need it. I mean, I used to have 3 or 4 baseball players that would bring their lunch in here in the lunch box and eat lunch because they didn't have time to go get it after class. So, I don't care. They brought their sandwich. It was kind of cute. I felt like I was in elementary school cafeteria. But yeah, you're hungry, bro.
Actually, what does it have to be?
I don't know. I'll look it up for you in a minute. It's not chicken. That's Thursday.
Mm-hmm.
You hungry? See, y'all get miserable in here. Y'all need to eat something.
I'm going to get my McDonald's.
Yeah, I know, but the whole time you're like squirming, going, what am I going to eat? What am I going to eat? It's kind of like being in church at 12 o'clock. What are we going to, you've totally zoned out what the pastor's saying. It's like, what are we going to eat? What are we going to eat?
Probably gonna be on road trips.
I just need a nap.
You need a nap? I need a nap. I hadn't gotten enough sleep the past 2 nights.
I eat food. That's what
We all gonna make it. It's only a few minutes, and I may or may not keep you the whole time. So,
I like the way you say it. I'm like, no.
I may or may not. All right. So, what would net income be? Where would it go?
operating. I like these are a little weird.
They are different. Yes.
Some.
What I'm trying to do here is to mimic your homework assignments so that you can do them more easily. Redeemed bonds, meaning they paid out the bonds at maturity. That would be a cash inflow or outflow.
Outflows.
It would be an outflow. What section does it go in?
Financial. I thought it was in financing, but
No, because what they're doing is a bond's a loan. So when the company sells bonds, they're actually borrowing money from investors. So it's financing. All right. What about issuing stock?
That's financing.
It's financing. They're trying to raise money. It's a way of obtaining money to do stuff in the business. Purchase a building. Investing. I do not like the accounting wording of getting a loan from the bank. Issued a note payable to the bank.
Financing.
Essentially what you're doing is trading paperwork for money. But I like to keep things on a simple level. I mean, I don't want to sound unprofessional, but issued a note payable to the bank. We got a loan. Which one makes more sense to you? Paying accounts payable.
What is that? Operating.
It's operating.
What is it? Accounts payable.
It's operating because even though accounts payable is a liability,
But it's
that's part of your day-to-day stuff.
It's usually a short term.
But yeah, it's just a long term, so I put it operating.
Yeah, you're right. Okay, so we're done for the day. So see, I told you, have a good attitude, things will be better.
Wow.
It's all in the attitude.
That's all our homework is.
If that, I may just have you read. I'm not really sure. I think I've got stuff assigned. I'm not. If you force me, I'm not sure I can tell you. All right, I'm gonna turn this off. Bye, Alexis.
Bye.